everyone. 5 p.m. on the clock, which means it's time to kickstart Rise with India Primetime Hour. And as always, we will do so with your one-stop shop for everything to do with your money. That's The Money Show. This is the show where we will tell you not just how to invest and grow your money, but also how to spend it wisely. Although I must say right now we are currently in savings mode as opposed to spending mode, simply because we are enjoying the TMS Savings Challenge. More on that later, but first, here's a look at the show menu. Massive carnage on Dalal Street. The Nifty is below 10,900. So as mutual fund investors, should you be worrying? Should you redeem your funds? Should you buy on more on your funds? That entire conundrum will be solved by us today. Later on the show, the government has officially brought about the bill to ban unregulated deposits. Now, what does it mean for investors? And also, if you are stuck in a scheme, in a Ponzi scheme that has had your money trapped, you'd want to stay tuned. And finally, later on the show, it is, of course, a long weekend next week, or should I just say a long, nice holiday week. Lots of holidays lined up next week. And now, in fact, if you have still not planned your trip, you can do so with the help of The Money Show. So we are talking about the massive fall witnessed in the markets, and I'm sure all you guys are very worried about which way the markets could go. Now, one reason, of course, is that budget proposal, where there was that surcharge that was imposed, and this included even FPIs, which of course in turn caused FPIs to pull out their money, and that of course is something that's a primary reason why the markets are falling. Listen in to FM Nirmala Sitharaman.
On the FPI separately, Secretary DEA will be holding a consultation into which I'll definitely walk in and talk to them to make them understand or hear them out to say what they have to say.
And of course, VRET now told you first that the Prime Minister's office may be in talks with the Finance Ministry to consider rolling back this FPI surcharge, which was, of course, for all means and purposes unintentional. However, as the markets fall, and every time I'm sure you guys open the newspapers, you are worried about the Dalal Street going literally in one way, and that is lower. What do market veterans then say about this fall? Well, Nilesh Shah, the MD of Kotak Mutual Fund, says that buying in the current market may not exactly be a wise decision. However, he does believe that SIP still would not be such a bad idea. Listen.
It's always difficult to figure out in the short term where the markets will go. But clearly, when valuations are in your favor, it makes sense to buy. Buying in today's market scenario will be like catching a falling knife. So don't bite more than what you can chew. But our recommendation to the investors is to take one step ahead in risk as markets have become more cheap from a valuation point of view. We recommend people to continue doing their SIP, and if possible, if your risk profile permits, to enhance SIPs so that you are buying more when things are cheap, when valuations are in your favor. However, optically we see profit growth coming in corporate focused public as well as private sector banks, in pharmaceutical companies, and in some of the chemicals and specialty chemical companies. There could be surprise in the telecom sector over next year or so. As of today, all these companies are declaring huge losses, and that has really hurt the entire sector. Going forward, if there is a pricing discipline, these sectors can swing from huge losses to probably marginal profitability in a quick time.
Okay, well, that's Nilesh Kotak giving those words of wisdom, and that is stay disciplined. And in fact, if you can, since the whole market is available at a discount, why not enhance your SIP so you can buy more units at a lower price? So that is a strategy that, of course, Nilesh Kotak is recommending. But I'm sure a lot of you guys are still a bit concerned about what exactly is it then that you can do with your existing funds. To talk about that, to talk about the market fall, to talk about the impact of the market fall on your mutual funds, I have with me right here on the show Uday Doot. He is the co-founder of When Wealth. He's joining us live on the show. Uday, thank you then for joining in on the Money Show. And like I said, right, I'm sure you as well may be getting a lot of calls from your clients who may be extremely worried that, hey, I saw the news channels and I saw the Economic Times paper, I saw ET now, and there's a fall in the markets. What should I do? Should I pull out my money from the markets? How many such calls have you received in the last 1 week? Let's start with that.
Luckily, the clients that we have been working with them for some time. So far we have got maybe just one call, not too many calls as such. So I'm happy that our clients have been through us through cycles as such.
I think you've already educated your clients well enough in the many years that you're working with them. But now, of course, for all our viewers out there, explain to them about how this fall in the equity markets impacts their own funds, whether they've invested in, a mid-cap fund, which obviously has seen more carnage compared to maybe a large-cap fund, especially in the last 1 year, or whether they are investing in an index fund. Every fund has really been impacted. So explain to our viewers how this market fall impacts individual funds.
Before I go to the impact on the funds, I would like to talk about the impact that markets and headlines have on our behavior. Every time we have been coming on the show, talking to people, you guys have been educating the viewers that equity investment is for the long term. And when we show the data over 5 years, 10 years, we show these compounding growth rates at 12%, 13%, 15%. And when people look at that kind of data, they obviously get excited and want to invest in equities. But as soon as they do that, they don't realize that those 5-year, 10-year investments will be 60 months or 120 months, and you have to stay through those many months and many weeks, and you will obviously get weeks like those or months like we had in July. And during such time, I think what one has to realize is that there is a clear impact on our behavior, or at least there is some sort of a concern in our mind. So there is, at some level, there is a fear that maybe this will continue going downwards, nothing seems right working for India, there are issues in the global right, etc. So first, it is important to understand there is this whole behavior impact that is happening at you. So 2-3 things. You will feel some level of fear that maybe things will go lower. Second, there is this whole extrapolation that is at work right now, and this happens at both ends of the market. When things are well, we think things will continue to be well, and when things are bad, we think that things will continue to fall. And none of that is true, because markets have this cyclical nature as such. So third thing that I have seen many times when stuff like this, like a month like July happens, is that there is this short-sightedness wherein people forget their long-term goals, don't think about what they really are doing, and they sort of start worrying about, okay, maybe let me just take my money out right now, I will think about it later on, maybe I will do something else. So there is one part of this whole market fall, which is the impact on behavior. Now, this is a far larger part and a far important part that we need to understand, because if we understand this, we will be able to take better decisions with our portfolios, with our investments, whether they are in mutual funds or direct equity and so on and so forth. Coming to the impact on the portfolio, the impact on the portfolio depends largely on the kind of portfolio that you are holding. If you are holding a majorly debt-based portfolio, they had a fantastic month of July, given that the interest rates were going down. But if you are holding a largely equity-based portfolio, obviously you have had a down month, and such down months happen fairly frequently in equities. If you look back at history, it happens fairly frequently. Second thing, within those equities, if you have been holding a larger portion of your portfolio in sectoral funds, in the infrastructure space, financial services space, then obviously you have taken a much larger hit, and something that we ask all investors to avoid, especially first-time investors, to avoid sectoral funds. And if you are holding small cap funds, then obviously you've seen anything between 10 to 12% fall in your funds, because the small cap and mid cap have seen a larger sort of burnt of this whole sort of crash. So that's how the markets have been impacted. MF investors would be impacted. I think most important for all investors who are long-term equity investors is to think about how it is impacting their behavior, think what they would do in a normal condition, and then start reviewing their portfolios.
Okay, all right. Give it a more longer term perspective. You know, that chart in fact is very interesting. It impacts two things. One is of course the value of your portfolio, but second and more important to obliterate is investor psyche, because then there's this entire fear that creeps in, and that in turn leads to, you know, investors taking hasty decisions that may not be good for their long-term financial health. Like I said, fear, short-sightedness, extrapolation more importantly, because we do have this tendency of just going with the fund that has of course shown the best historical performance, when knowing or sometimes unknowingly that this may not repeat in the future. Similarly, bad times as well may not repeat in the future. So extrapolation is a very important factor that a falling market does impact. Fear and short-sightedness as well, because like Uday as well said, keep your eye on the long-term goal, whether it's retirement, whether it's, you know, your child's marriage, your child's education. Keep your eyes on that. Does this, you know, 100-point fall in the market impact that? Well, no, not really, especially when you have 10-15 years to go. And again, like Uday as well pointed out, those guys who had more debt on their in their portfolio, and I'm talking about debt mutual funds, fixed deposits, corporate bonds, which we will as well be discussing in the days to come. They tend to they have performed better than equity holders. But again, you know, this is of course the cyclicality in nature as well, as Uday flagged off. You have to consider all of that too. But of course, on that note, I would like to remind all our viewers that we will be starting Ask the Money Show segment, or Ask TMS, where you, our viewers, will have the opportunity to get your portfolio checked, to get any investment cues from Uday Dhoot himself. So start thinking up your questions, and I am going to take them up one by one. 24990388 is the phone number, or you can email us on themoneyShow@etnow.tv, and I will be trying to get your email and get it answered by Uday. Uday, another question that I would like to bring up is that in a scenario then where we have, equity markets are falling, and then of course, not to mention, you also do have fixed deposit rates being cut. Day after tomorrow, the RBI will announce their decision, and given the fact that the markets and the economy is looking weak, in all probability, the RBI will, in its attempt to spur the economy, cut interest rates. But that means banks will as well have to cut their FD rates sooner or later. And we're already seeing that happen. So in such a scenario, should investors be worried then about the lack of investment options that are available? And especially, you know, as a regular salaried person who's just received his or her salary, there are really very few options available then, especially because people are fury and very worried about the whole fall in equity markets.
So two things regarding this fall in equity markets and how you should look at your portfolio is that, as we already mentioned, that there is this whole behavioral impact, so you don't take knee-jerk reactions. Look at what your goals are, look at your current asset allocation and rebalance your portfolio. Let's say if the equity piece has gone down and you think that, hey, no, my goals are still long term, my short term is taken care of, move some money slowly from debt to equity. You could possibly do STPs, systematic transfers from debt to equity over a 6-month window. That is something that you can do. If you're confused as to whether there are any specific funds that you own and you're not sure of them, maybe reach out to shows like this, or reach out to an advisor and understand if there are any specific schemes in your portfolio that you're not sure of. With regard to the fall in interest rates, there are two ways to sort of think about it. Is that one, I think the whole idea of decreasing interest rates is basically to spur the economy up. So for a salaried person, there could be obviously if he already has investments in debt funds, they are likely to do well as interest rates go down, as you have seen in the month of July. Second, the better part of this would be possibly lowering of car loan rates, home loan rates, which will mean that at the same level of EMI, either you reduce the tenure of your loans, or you could basically reduce your EMI and maybe use some of that additional surplus that you generate to move into equity. So essentially, I would say that times like these are great times to build a long-term portfolio. One should stop worrying about 3 months, 6 months. Obviously, keep aside your emergency fund, keep aside your short-term goals in fairly safe investments. But beyond that, whatever additional that comes through your way, move them into long-term investments and make most of these markets.
Well, you know, there we are in the midst of our TMS savings challenge, and it's all about saving money. And hey, you're going to get more units of your mutual fund at a lower price, and that itself, in a way, is also like a discount, if you may. So yeah, this is a good time, like Uday said, to pick up, funds for a longer term perspective. Okay, let's kickstart Ask the Money Show, and we've got our very first caller, Mr. Manish from Ghaziabad. Hi, Manish. Good evening. What's your question?
Actually, I want to start a mid-cap fund.
Okay.
I have shortlisted two funds, Axis Mid-Cap and Kotak Emerging Equity Fund. Can you suggest me which would be better for me for 15 years?
Do you have any other funds that you currently
Yeah,
own?
I have other funds in multi-cap, large
Okay.
and mid-cap and small cap, but I don't have any pure mid-cap.
Any pure
therefore
mid-cap
I want to
fund.
start a mid-cap.
Okay, fair enough. He already has large cap, multi cap, small cap, and now he's looking for mid cap. He's already shortlisted two there. What would you recommend?
Manish, my personal preference is the Kotak fund. I think between Kotak and Axis, they are slightly more aggressive on the mid-cap side. So, given that one wants to do a mid and small cap fund, maybe one wants to take a slightly higher risk so that one can get higher returns. So, my personal preference here is Kotak, the Kotak Emerging Fund.
All right, Kotak Emerging Fund, Manish, that's what Uday is recommending. You could pick of the two that you have shortlisted. Okay, well, let's take on board some email queries that we have received. And the very first question is from Dhaval Vora. This one too is a fund-specific one. He asks, I have mutual funds that he has invested in for the next 15 years. So he's a long-term investor. He says that he is willing to take more risk. His question is, should he be adding more? Now, there are 8 mutual funds. And I think they're well diversified in terms of having its pick on multi-cap, on large cap, as well as on mid and small cap names. So there's Franklin's, 2 funds from Franklin's, the blue chip and equity, HDFC, 4 funds, equity, top 100, hybrid equity, and the mid cap opportunities. And then there's the Reliance Value Fund and the small cap fund. That's essentially his portfolio composition, and that's how he's divided his money in these various funds. So firstly, Uday, is it wise to have 8 funds in your portfolio? He wants to invest for 15 years, but would you recommend keeping these 8 funds, and also any chops and changes that you would recommend? Any observations you have in Dhaval's portfolio?
See, the way I think what has happened for a lot of investors is that as the whole reclassification processes happen, now you have these different categories of funds. You have large cap fund, multi cap fund, small cap. So essentially, for the reason of diversification, people end up picking 1 or 2 from each of these categories, and that's why you have these 7-8 funds. So maybe there is possibility of some consolidation there. In terms of his allocation right now, he has almost 30% in large cap, 30% in multi cap, and then some value, some hybrid, and some small cap fund. And he was saying that he's willing to take some more risk. So it's almost like a 100% equity portfolio. The way that he can possibly increase his equity composition is that maybe move the hybrid piece into a pure equity fund, or go down the curve of the capitalization, like you mentioned right at the beginning of the show, that mid caps and small caps have seen big falls in their values over the last 1.5 year. So maybe slowly start transferring some of his large cap portfolio in a staggered manner over the next 6 to 12 months into the mid and small cap segment. So those are things that he could sort of look at doing.
Okay, so that's of course Uday Dhoot's view on Dhaval Vora's portfolio, and in fact for all our viewers, words of advice coming in on how you should essentially plan the constituents of your portfolio. All right, I think we have a live caller joining us. Yash Gupta from Shimla is now joining us. Hi Yash, good evening. What's your query?
Ma'am, I have 2 questions.
Yes, go ahead.
My first question is, I'm having about 50-60 lakhs in mutual funds.
Okay.
And I want to transfer this amount to my children.
Okay.
So can I gift through mutual fund?
Okay, all right. You want to transfer it to your children. I suppose there would be some sort of a tax implication as well that you would be interested in knowing. Uday, how should she go about transferring this money to her children then? How would you recommend her go about it?
Are the children's minor right now, or and what is the purpose of transfer, as in gifting them to the kids? Just want to understand so that I'm clear.
Just to pass on the wealth to next generation.
Are they minor right now?
No, they are major.
Okay, all right. I think if you can give to the kids any financial assets that you wish to, I don't see there are any specific on the tax implication side. I'm not very sure exactly on how this process will work. But if you could drop in your email address, maybe we can give you the detailed process on this. But I think the only thing that you will have to do is draw up a gift deed and reach out to the AMC for the transfer of these units, and this should be possible. If they are major, then obviously it's like a one-time transfer. Better to have a gift deed done for these transfer of units. I'm not 100% sure on the process. If you can just drop in your email, happy to do some homework on this and get back to you.
What, in fact, what I'd recommend is the moneyshow@etnow.tv is our email address. You could write in your email, and of course tomorrow we will be discussing taxation, so we will definitely take up your question tomorrow as well if there's any tax implication that you'd like to know about. Thank you for calling in. I hope we've been able to answer your query. All right, next up we have an email question that has come in, and this is a very interesting one. It's from Ninan. Now Ninan has said, I have invested in the Kotak Nifty ETF. 1,000 units have been invested, and he wants to know that now this money in turn is of course invested in the Nifty, in the 50 companies of the Nifty, and these companies in the course of the year of course declare dividends that accrues to the AMCs, and now he is told that the funds take this money and invest it back, and hence the NAV increases. However, Kotak does not advise him anything. So essentially, Uday, this is a good learning lesson for everybody who wants to invest in ETFs. How exactly does the dividend that these ETFs earn from various companies that they have in turn invested in work? And if an ETF investor wants to know what sort of dividend has he earned, can he do that?
So one important thing here to understand, whether it is ETF or index funds or the regular mutual funds, is that the mutual fund is formed as a trust, wherein we all investors in the mutual funds are the beneficiaries of that trust. So basically, let's say if the ETF or the fund is owning a specific share which is declared the dividend accrues to that specific scheme, and obviously it increases the NAV of that scheme. So that's how it happens. Now if you want the specific detail, at the end of the year we get these annual reports of every single scheme that we are invested in, and if you see there, those details are provided in terms of how much has been how the NAV went up. So basically, what has been the increase in what has been the dividend that has been received in that fund, what has been the capital gains, what have been the capital loss, and how that whole construction of accounts for that particular scheme has happened is provided in those annual reports. Beyond that, I don't think there are individual script wise breakup that are available to the unit holders, because it is not necessary. It is of frankly no use as an information to us. But all of this does come as part of your annual data that we get for the schemes that we are invested in.
Okay, and on a closer perusal as well of Ninan's email question, he says the dividends are reinvested, but there's no record or statement from them to this extent, and he wants to know how much he's received from each company. Well, like Uday said, really you do not need to worry about how much you receive from each company, but of course if you want a more detailed statement at the end of the year, the annual report from an ETF should be able to help you with some tidbits of what you'd like to know. All right, let's move on and answer our next question, which has come in right now via email from Mr. P. Bobby. He asks, in the current situation in the market, is it better to invest in a balanced fund or an advantage fund? That's what his question is. Uday, what would you recommend?
I think one Mr. Bobby's query is regarding the regular balance fund versus the balance advantage fund, which is the category where there is a dynamic allocation between equity and debt, and a balance fund has almost like a fixed allocation between equity and debt. One thing that we keep talking to all our viewers and investors is that investing is all about not as much as market is a determinant in your investment decision. Your financial goals are also a determinant of your investment decisions. So if somebody has money today but has a very short term goal, then even if the markets are down, I would recommend him to stay with debt funds, liquid funds, and safer investments. But even if the markets are down and you have a long term horizon, then obviously it's good to get invested into these hybrid funds, whether the balance or the balance advantage fund or the equity fund. So one obviously depends on your goals and the requirements that you have. Between the balance fund and the balance advantage fund, I like the balance advantage fund as a category because it has this dynamic allocation. It increases your equity allocation as the markets are going up and reduces the equity allocation as the valuations sort of go up. So between balance and balance advantage fund, I like the balance advantage fund as a better category to invest money in.
All right. Okay, on that note, we are out of time on this edition of Ask the Money Show. So, Uday, thank you then for joining in and helping our viewers out with all their questions and queries. Of course, folks, we'll always be back with a brand new edition. So, if we've not been able to take up your question, don't worry, we will take it up in the days to come, but continue watching The Money Show. And also, for all you guys tuning in, your main goal is, of course, wealth creation. And as we always say, it's not enough to just earn a lot of money or invest it in the markets. It's also important to save your money. And hence, we've decided to come up with the TMS Savings Challenge. Save money, click a picture of your money saving activity, be it drinking coffee from home or be it not ordering in and eating your simple ghar ka khana. Take a picture, post it on the social media of your choice. Don't forget to hashtag TMS Savings Challenge, tag ET Now or me, and we will present the most innovative money saving ideas on The Money Show and also on ET Now's social media handle. And of course, don't forget, if you have any spendthrift friends who need to save money, you must tag them as well. Welcome back. You're watching The Money Show right here on ET Now. Last week, we had news that the Parliament has decided to pass the bill that essentially bans unregulated deposits. I'm sure many viewers out there may have been caught in a scam which did involve them depositing money with a particular depositor that has promised him or her returns which are virtually risk-free. Or if not participated in such a scheme, at least may have received calls and a dozen emails. For some of you who are wise and did know to stay away or did know better, you all managed to save your money. However, there may be a few of you out there who may have got caught in such Ponzi schemes. For the benefit of all of you out there, the government has now discussed this bill in the Parliament and it has been cleared. This is essentially the bill for banning unregulated deposits. So how exactly is it that this bill protects the interests of investors? I have on board with me right now Aman Agarwal. He's a director and professor of finance at the Indian Institute of Finance in Delhi. Aman, thank you then for joining in on ET Now to just get our viewers introduced. What exactly are the provisions then of this bill that essentially bans unregulated deposits? How does it help investors?
Yes, I think it's a very crucial step which the Government of India has taken, the Cabinet has taken in the Parliament to actually ban the unregulated deposit bill. It actually has a coverage of going from an individual to a partnership firm or a large firm or anyone who is taking deposits in any form which is not authorized to. You see, the deposits which have been taking place largely, there have been the most common being the chit funds. There has been a chit fund regulatory framework where they had banned chit funds, but despite that, large number of deposits keep taking place, and now a large number of corporations were getting into taking deposits from small individuals at different parts of the country, and which was not accounted for. You see, the law only permits deposits to be taken by either banks, that is the financial institution framework, only the banks per se in terms of deposits, or it could be the NBFCs where they are allowed to take a certain component of deposit which goes on for a period of 5 years and more. Their third component which was allowed under the regulation were the companies as well also, which could actually take deposits to the tune of about 25% of their net worth from the open market, that is investors, depositors, small institutions and all, plus about 10% from their equity holders as well. So leaving that 35% which comes out of the net worth, they could take a deposit, but rest they could not take deposits. No other organization, whether it is an individual, association or a partnership, or can take any deposits. If you really look at today's market scenario, there are large number of online trading platforms today which are existing, where people go buy, like people like you and me, go buy products, sometimes return products, and those money get deposited in such an account of those companies which manage those trading platforms. Now those deposits also tend to amount to creating unregulated deposits, because they have not been entitled to take such deposits. There are existence of committees as frameworks, where a group of people come together and start functioning and taking deposits together, which circulate. And that was critically important, because that was actually used by some of these corporations and individuals around the country for actually hiding black money. The fact that we have moved into a less cash framework, the demonetization taking place, there is a need to create this framework. But the important component in this bill is not that it is actually stopping such deposit frameworks, it is actually bringing them into the right perspective. Earlier there was no recourse. So if there was some deposit made by someone, A person to a B person, in fact as an individual, me to you or from you to me, I had no recourse to actually go about asking you for that money, because it was legally illegal. Today there is a recourse. Now an individual who has, for some reason, because of a fraudulent activity, got into such a deposit which he was unaware of the fact that the organization is not entitled to take such deposits, or an individual is not entitled to take such deposits, he can or she can actually go to the court of law and take the recourse of getting his or her money out of that organization, whether it is a company or a chit fund or individual or a group of individuals which has got into this activity. And this is what this bill, and actually which is now going through, because the Rajya Sabha and the Lok Sabha has approved it. In fact, earlier this year, when the last session of Parliament took place in the month of January, February, even at that time the Lok Sabha
was introduced, that's right, and now it's of course being reintroduced.
Now both of them have approved it about a couple of months, yes.
Right, now it's in fact being reintroduced, so that's a very important
and both of them
point.
have approved it now.
So it's finally a bill. Officially, no individual, partnership firm, LLP, company can take deposits unless and until, of course, it's regulated by the government. And this was really the need of the hour, Aman, because we had seen, the Sarda scam, then we had the IMA, Stock Guru, Rose Valley, lots of cases that were being investigated by the CBI. Now, let's talk about those. Now, of course, going forward, you cannot, no depositor can just take money like that from individuals. But suppose if an investor has unfortunately been caught in such a situation where he has given his money to a depositor, maybe that depositor has really appealed to the human greed of higher returns and no risk, etc., and he has deposited his or her money. Now what? Now with this bill, what sort of a recourse is available? Like you mentioned, there's a proper recourse. What sort of a recourse can he or she take?
Now, I am happy you asked this question, but let me add up to a few other items in addition to what you talked about in terms of the kind of deposits which are taking place. You see, like in the real estate sector as well. So, a lot of people want to buy a house. So, at times some of the real estate people would go about saying that you deposit so much and this benefit will be given to you and we'll open it later on. Or even in case of gold, jewelers have been actually trying to take deposits on a pretext that you deposit it, we'll keep it for you, and maybe one payment or two payments or three payments you don't do, and then we will give you this much kind of a door. All those category of compounds actually come in to this deposit framework. Now, the recourse which is available to an investor today is there is a serious punishment which goes on for certain cases from 1 year going to almost about 5 years of imprisonment, and from a penalty of about 2 lakh rupees going to almost about 25 crores, which could be actually penalized depending on different kinds of frauds which have been conducted in this deposit framework structure. Now, you see, any depositor, as a matter of fact, cannot be aware of all the rules and regulations, and it is very difficult for a depositor in today's time in a dynamic world where a lot of organizations have come in. You see, mobile companies have payment gateways. There are other gateways which are being created by online trading companies which are selling products and services. Now, you typically would always ask them to put your money there and put your balances there, but are they really authorized? Some of them are run by companies in India, some of them are run by companies overseas with no office locations given even on
what,
their
if you
websites
could-
or structures. Now, what recourse? It's very
Aman,
difficult.
if you
But
could,
now,
like you said, the
but
depositor
now, as I
cannot
was saying,
possibly know
now the
everything.
person can
So
buy-
in such a situation, could you help, throw some
Yeah.
pointers or something as to how maybe there can be a red flag in the minds of, the depositor or the investor that, hey, I'm not supposed to give my money to XYZ because he or she is not authorized. I mean, are there any red flags?
Correct. Correct. Now, this red flag is getting highlighted with this bill and the programs like yours, which are actually bringing it to the public notice that there are these unauthorized deposits. People did not know what unauthorized deposits were. They thought, if I take a loan from someone or I give loan to someone and keep some money with someone, I thought it was a normal practice because it has become a way of life. It is not that. Now, the red flag. And fortunately, now with this bill, I can actually go to the police station and register a complaint, which I could not do before, because even if I tried to do that, they would say it is illegal, it does not come under the purview of any act, and so we will not take any action on it. Now they can register a complaint, they can go to the court of law, get a punishment against the person who has done this kind of recourses, whether it was Sharda or chit funds or these dwellers or the real estate operators. And according to the insolvency code, which has been also approved and amended recently, there would be a decision which would be taken within 330 days according to the new amended insolvency code, and that could also be there if it's a large company. But in a smaller company, the court would take an action and they will have to be not only imprisoned but also will be refunded the money according to the money allocated to each of these depositors. So that's where it's a question where I need to be now more aware, and the programs like yours which are highlighting this bill, giving the right kind of education to the people at large, are important to get this message to the people that such kind of unregulated deposits have been occurring in this country since independence, but which needs a stop to take place, because there are only a specified group of institutions which are allowed to take such deposits, and not any and everyone can go about taking such deposits.
True, true. Very, very, very true. And like, Mr. Agarwal as well mentioned, now, if you are a victim, go to the police station, register a complaint, and the police has to accept they will file an FIR. This is what essentially this bill allows for. Now, of course, Mr. Agarwal, the main worry is that a lot of our investors out there are worried about the timeline. The usual statement is court kachire ke chakkar mein, right? I mean, forgive my mispronunciations over there, but essentially a lot of them are fearful about that factor as well. Is there a timeline of sorts that, perhaps this bill brings in, that within this period, this case should be closed?
Yes, I am happy you asked this. Now, you see, there are certain cases which get registered when they goes to the court. So, first case, as I said, is the stage of registering information, the first information report, the FIR as we lodge, and then a criminal investigation starts taking place and the case goes to the court. Now, there are two categories in this framework. Now, those categories which do come under the Insolvency Act, there the timeline after the amendment of the Insolvency Act has been constrained to a period of 330 days, where the decision has to be communicated and a decision has to be taken in the interest of all kinds of depositors who have given money to that organization, which would include large corporations like whether it is Sharda or real estate operators which are operating these huge infrastructure projects and so on and so forth. But when it comes to a small investor like you taking money from me or I taking money from you, there in that case there is no specific timeline which is given. But please understand, the society runs on a fear factor, and today there was no fear in the past that what will someone do? Someone is weak and is not in the capacity to do something. The person could not go to the court of law, could not go to the police, because then they would ask questions, where have you raised this money? Today this bill provides for the fact that they are not actually asking these questions, where did you raise this money, what did you do, how did you get this money, why did you give? The question here is, you gave some deposit, that person who was not entitled to take the deposit, he has defrauded you, who has cheated you, and hence he is within the framework and he will be penalized for such an act.
All right, Mr. Mr. Agarwal. On that note, really appreciate you joining us and giving us a lowdown of what the provisions are of this bill that has been passed now by both the houses. And folks, if your money is stuck now, you can go in for legal recourse like Mr. Agarwal flagged off. Go to the police, file an FIR, and they will have to accept it. By the way, here's an interesting tidbit. Ponzi was actually, the word itself was derived from the surname of Charles Ponzi, who had started an investment scheme that promised people, that their money will be doubled, which obviously did not happen. Quick break, but there is a long weekend coming very, very soon. And for all you guys who have not yet planned your holiday, we on The Money Show will help you do just that. Welcome back. You're watching The Money Show right here on ET Now, and we at ET Now are already excited about the long weekend. As you can see, I have changed my studio as well for this very purpose. And for the unawares and those who are so very busy consumed with their work, 12th August is Bakri Eid and 15th August is Independence Day. So out of the 5 working days, 2 of them are holidays, and this gives you guys an opportunity to make the most of that holiday full week by planning for your long weekend. And we on The Money Show are, as always, here to help you with that, whether it's budget or if you're going to be a little more generous with your budget. To talk about that, I have with me from Yatra Online, Sharat Dhal. Hi Sharat, thanks so much for joining in on The Money Show, and I'm going to ask you about your long weekend plans as well. But before that, this is certainly going to be a very exciting week. I suppose cities will be empty, and that would be a boon for all of us who are still going to be working very much in the city, I suppose. But yeah, what would you recommend for all our viewers out here who have still not made their plans for next week? Where would you recommend they go?
Good evening. It's great to be on your show, Mubina. So yes, long weekend coming up, and I think a lot of city goers definitely looking for a break from their daily routine. We've seen a lot of increase in the queries for destinations in and around the metro cities in particular, and the hotel rooms in these places are filling up fast. So if you haven't made your plans yet, I would strongly advise you to go ahead and make your bookings, because as you come closer to the date, you're going to find that all the good properties in these destinations are virtually packed up, and the options from the metros in particular. I think there are a number of options. You have in the northern part of the country, there are various places which are within driving distance, places like Jaipur and Agra, and Bhimtal. You have Corbett. In fact, we've got a fantastic package specially created for Corbett, which is at a 999 per person, 9999 per person. I'm sorry, for a 2-night stay. And that includes all your food and drinks as well. So it's a fantastic package, and there are a number of options which are available in various parts of the country as well. If you look at the west, there's always Goa, which is an eternal favorite. But apart from that, options in Mahabaleshwar and Khandala, Lonavala, smaller places along the coast as well. In the east, there's Darjeeling, Gangtok, Puri. We're seeing a lot of demand coming in even for the northeast, in places who are like Tawang, and then we have in the south, you have options out of Ooty, Kodaikanal, Coorg, Wayanad, Pondicherry. So these are the options that are there, and these are places that rapidly get filled up on any one of these long weekends. So many options out there, and definitely would advise people to start making their plans.
Sharat, on an average, do you see a real significant rise in hotel prices, flight tickets, especially on such weekends?
Well, prices do go up as you come closer to the dates, and particularly we've seen that on the hotels front there is typically a huge shortage of hotel rooms for such peak dates. And at the end, then what happens is that a lot of people make do with other options, lower quality hotels or maybe even homestays and other things also get filled up during these long weekends. On the flights front, what we're seeing is actually, it isn't really the peak season. So even if you make bookings today, I think you're okay. As you get into the last week before the travel, yes, definitely they would be. You would have a problem with prices going up as you come closer and closer to the date. But a lot of people prefer on such weekends to, drive down to some destination closer by. It becomes easier. You can plan on an impulse, decide with a few friends and just, head off with a moment's notice in that sense.
All right. Okay. Sharath, very quickly, one word answer from you. Do you have any long weekend plans then?
Well, I haven't made any plans yet, but there are some thoughts with a couple of friends looking at going to Bharatpur and doing some bird watching out there. That's the plan. So let's see if that fructifies.
All right. Okay, Sharath, good luck with that. Hope you enjoy yourself. Me, the city dweller, meantime, will be right here on The Money Show, continuously giving all our viewers advice. Thanks so much, Sharath, for that. So book now, book early, you'll save money. And of course, don't forget, you can post that and brag about that on TMS Savings Challenge. We'll wrap it up here on The Money Show.